Hey guys, welcome back. Welcome. Right. Let's see what we're gonna get today or this PM. Yeah, the funny thing is this candle here with the pullback, I entered there and on this black candle it's this white candle. I entered there, it came back. It went to my TP, didn't trigger it, and now it's just maybe we'll get it now. So we'll see. Oh gosh, I've been trading for more than a decade. Yep, I'm in trading for more than a decade. But I'm not. I've not. If I'm saying more than a decade, I'm not being profitable. I mean, I've paid my fees. I've only found ICT later on and Beta Market Maker Method Steve Morrow. Those two. Before that, I was trying every indicator there is, paid for courses, really wasted a lot of money. But I'm past that now. I'm in a good place, and yeah. So I mean, the conditions we're in now. This is the first time I'm trading in these conditions. So this is a big learning curve for me now to be patient, um, especially when price is not doing what it's supposed. Well, not doing what I wanted to do. Yep, the new account is fine. I did realize something, so I passed the account, and in their rules it says you can't. Um, one of your trading days can't exceed 50% of that of the qualification. So I passed it, but I didn't pass it. So I need to trade more on that account, and that's why I don't like prop firms. So basically, what happened the first day, I made $800. I lost some, and then I ended up $180 positive. And the next day, I caught a nice trade, made over $5,000, and that was the whole rule of I needed $5,000 to pass. I did about 6,000 in total. So and I did read up this. There was no consistency rule with FTMO, but they've got a 50% rule that one of your trades can't make up 50% of the to qualify. And I was just like, "Ugh, whatever." So yeah, that's where I'm at with that account, and that's why I can tell you guys that's why I hate these things. I just want clear rules. I want to know this is how much you're not allowed to lose 1% a day, or give me parameters like that, and then I'll carry on. Yeah. So just give me a second. Hold on. Sorry about that. Yeah. So basically, what you need to do is, I mean, you can break it down. I mean, I know the futures accounts, they've got these 20%, 30% consistency rule, which allow you to take smaller wins. But if you take a good trade and you make your money. So on the CFDs, they used to let you just pass. I did not know about this 50% rule. Seems like a new thing. So yeah, so I had to, but it's trading days. It's not a trade. So even if I broke that trade up into 3 trades, I would still make more than 50% because I did 100% in one day, which makes it, what do you call it? Not negative. I mean, you're really trying to do it, but now I need to go sit and take the account, break it down, and win small bits at a time. But anyways, yeah, even if I split it up into that 16 into 8 lots, it all happened in one day. So I'm still gonna have a chat to them because after I passed it, I was waiting for that email saying that you passed it, and I actually spoke to someone today, and I spoke about it, and then I thought, geez, I haven't even looked at my account, and instead of getting an email saying pass, saying that you haven't met the criteria, so I need to trade more. I haven't read the rest of it. Okay, so at least we hit this profit target, so that I'm still down 393 for the day. So we'll see what happens now. I don't actually know if we're gonna where we are on this. Let's have a look. Yeah, so 30% consistency rules. I mean, it's actually ridiculous because if you catch a nice trade and make 1,500 or something to that effect, then I mean it means nothing. I mean they keep telling you they're putting these rules in place to protect you, but they're not protecting you. They just make it difficult for you to actually pass it. I think FTMO is not out to make it difficult. I mean, it's definitely easier. Well, if I say easier in a way to pass. It's more expensive though, but if you compare it to a futures account's got some silly rules. So, but anyways, we'll see. All right, so this high was taken out by ES, by Dow. Everybody took that high out earlier when we trade the AM session, and I'm not putting it on here. I'll change the layout of my stream a bit so we can have 15-minute, 1 minute, and all of that. So I don't have to jump around, so we can see it all in one. I just want to look at something outside. All right, so ES is moving higher right now. Dow not, and it looks like Nasdaq is gonna probably go for that high now. So we'll see when we get there what the next steps would be for Nasdaq. But it is bullish at this point in time. Right, so let's see. I can't. I mean, after we, did our last stream, I did look at this right here where we ran lower and we broke higher. Yeah, didn't get back into this fair value gap, so I actually entered up here, and then I thought, oh, my luck, it will come down to this, but it continued higher. So now, obviously, we want to see what we're going to do at the high. Are we going to do some sort of a rejection to pull back or what? So when ES came up here, it did pull back a bit. So I don't know if we're going to see something similar here. So let's just have a look. Let's just be patient. Give me a second, guys. Right, so all-time high is definitely the target here. And hopefully we see some sort of a something. I don't know if everything or anything's going to happen or just building up higher here. I don't even know. I don't have context to say we're going to drop here because was this just us going higher and in NFP on Friday? I don't know if it's a catalyst to send price lower or nothing happens and all this bullishness is already priced in. I don't know. So even on the 5 minute here, we ran liquidity here. It's a nice push down to ran liquidity, push up, and then it's all small candles. We did spike through, close above, consolidate, close above this now. I mean, there's nothing here where I can say we're going to come down and then take it up from there. So don't know. Just see this 1 minute again. Maybe. So I can't even trust this little breaker, not breaker, order block here. That's 50%. So maybe in this little gap here. Yeah, today. Let's see. Let's mark it out and see. I mean, we just missed it now. But let's see. Looks like we're going to punch up through those highs now without even coming back to this fair value gap. So okay, so if we want to go higher up there, we want to see price actually close above this up there. Otherwise, we could come down, test this to this 50%, but looks like we're going to push higher. I can't take a trade here. It's just not right for me. My luck, it will then come all the way down here. Then I'll be stuck. Okay, so now we've closed above it. So, I mean, if we don't want to come down here, I mean, I'm just looking for an area for price to come back to this black candles here, maybe. That's 50% there. So let's see. Fair value gap. I don't have any gaps here, but this is obviously a gap, and we're going up there now. 634. Okay, we're gonna take that high now, and let's see. So I don't have any gaps. This is the only gap that I'm seeing now, but we broke through it. So let's see. Let's see what's going to happen now. Alright, so now this is the big test. Now, are we going to run up 200 points, or are we going to give some sort of a reversal here? Let's see. The other thing I wanted to show you guys. So we had this jump here, which is good. Just trying to think. There's a little fair value gap here under 1 hour. 12. And we bounce off that. I just want to see what opportunity was in that little pin. Right, this was it. This was the liquidity right here. Okay. Even on the daily, the Nasdaq is so heavily extended. It's really extended. And bears can step in at any time, but we'll have to wait and see. Right. Okay, so if we bounce from this fair value gap here, I mean, if we slice through, then we'll work with what we got down here. But if we make a high there, it'd be good to see a swing point form here, another high, and then shift through that swing point. That would be a nice area to look for shorts. Obviously, for the short term, not for the long term. All of these lows here are all liquidity. We've run liquidity here, so we might just dump in this area and then continue higher. I don't know. But 15 minutes is still bullish, so we need a lot to happen to take price lower here. So I'm just looking at so every time we made higher highs, it was slow grinds up, and that's where we are now as well. All right, so now we've got almost a swing low there. See how this candle close. If we then rate this high and then break this low with a shift, that would be something to look at. Okay, so I'm taking this off because we've made it. Even if we just take it down to this Beverly gap here. This like on 50%. Literally on the 50% marker. I don't have any gaps here. So anything specific you guys waiting for or looking to set up to take something? Let's see. So 1 minute is very extended as well. Everything's very extended. Doesn't mean price have to drop down and sell off. I mean, it can continue. The momentum is very strong to the upside. I just don't want to get stuck in a sideways move here again. See, we've inverse, and now it looks like we want to inverse again. Okay, let's see what happens. Yeah. So you refuse to close below there. Okay, let's see. Do. Yeah, so I mean, that break of structure holds. This break of structure holds. That one holds with that low. So it's holding even here. So if it's in the right direction, then it's fine, I guess. What, this one here? Which one did you try to short? This one. So I don't deem this as a breaker structure because we didn't close below it. $12.35. Oh, wait. 12.35 is around here. The reason, I mean, let's see. Yeah, I don't know. See, this is still pretty bullish, and I mean, we didn't run liquidity on the top end here with this break of structure. I mean, this was the liquidity rate. We didn't really break structure here. We pulled back. So you want to look at something up here. So I would be very sketchy to take a short here because there's liquidity and but anyways, let's see. I mean, if you wait for price to get to a low or a high at a at a relevant contextual place, like this one here, it ran liquidity in this fair value gap. It pinned through, it bounced. Take all the structure out. This was a good entry. So if you got the liquidity right and all of that, then it shouldn't be a problem. All right, let's see. Okay. Remember, not every break of structure and fair value gap is going to be a tradable one. Got to have clear rules for that to take it. So my core rule is, you've got to be in an area of interest like liquidity, equal highs, equal lows, fair value gaps. And say you've got a gap here, price go in, and then rate that high, and then break down. That's the breaker structure. Now I'm looking for a gap in the equilibrium here. Get there, that's where you should be taking a short, but then you need to see reaction from that. And that's when you start trailing your stop. But if it's already moving in a direction, I mean, I'm not saying you shouldn't take fair value gaps. Like, yeah, there was a fair value gap. And I always look for consolidation, manipulation, and a shift away. If I see consolidation, manipulation, and a shift away, this fair value gap is a very good, I mean, that breaker structure is good. This test years back is good. And it forms within that 50%. So that is a good entry. And if you wanted to refine this entry, see there's a little gap between those two. That's where you could have entered. But yeah. So we're stuck in this range now. So we formed a high. We didn't break that low, that structural break, and it's holding price there. And there's a little gap in between as well. So go to the top, to the bottom, to the top. So we either gonna, because we ran a low here already, but there wasn't a clear shift away. So I don't know if this wants to go higher or what. It is bullish, so won't be surprised if we do. But this could also be the consolidation, manipulation, shift, test, and go down. I mean, if we're just looking for that one setup, we most probably not going to take trades. There was an AM trade this morning that was that setup, and we would have been stopped out at break even, or I would have got stopped out at break even. Why 1428 fairly gap 1428. So gosh, so I don't really look for these little tiny gaps. I look for gaps that stands out for me. Like this is a gap that stands out. There's a little gap in between there. I don't trade every single gap, to be honest. I look for, I mean, this is a gap, but because we didn't close below the body of that white candle, because we inversed it, but this wasn't good enough for me. I wanted to see something else. Went back, we didn't break lower, so I knew we're gonna probably get stuck here again. And then as you can see, price obviously got plans to go higher. I mean, where do we want to go? We're going to go to 30,000 or something. I don't know. If this is the consolidation, but if these black candles spike below here and close back and then send price higher, I would have said now, let's look at this. And this fair value gap here. So there's a little gap down here, but this gap is more, I mean, price could go to those tiny gaps, but I always look for the gap that stands out for me. And I mean, I just don't look at gaps on its own. I would look at, in this case here, we made a high, we made a low, and I mean, we close above that black candle there. These array of black candles, we didn't close above it yet until here. So we closed above that black candle, we went up, we came down. We closed above that, but we didn't take that high out. And then we dropped again. So that's signature for price going sideways again. Till you see a candle, or, you know, in a bullish market, black candles running a low, and we're not running lows here. The only low that I can see, this one ran a low, so that was a bullish structure there. We didn't take it out, and we still continued sideways. We did it here again. That's bullish, and then we broke higher. We didn't get back to test it though, so it's one of those unfortunate things. All right, so 28,750. Yep, I think 28,750, 29, 30,000. All of them is gonna be open. So this gap down here is the one that stands out. It's at the right place as well. This one here. All right, so let's see. 50% is right on top there. Well, let's try it. Why not? See if there's maybe a bounce in here. Are you talking about this range here or lower? I'm just worried we haven't filled any gaps here. So this could potentially slice right through down here and pull back up. I won't be surprised if that happens, because we've done it a couple of times. It's the last trading session. So I'm just looking for a bounce here if it wants to consolidate again. At 562, 560, 562. Where is 562? Gosh, man. So 562 is here. I don't see any equal lows there. 585. 585. Yeah, there's liquidity down there. Let's see, let's see, let's see. Let's see. $5.28. 5.28. 5.28 to the high. 665. So I would most probably the liquidity low, use that to go up here. Yep, lines up with those liquidities. And there's liquidity below that as well. So we'll have to see. So one thing that makes me think we will bounce from this fair value gap is we consolidated here, we pushed away. We didn't push back immediately. We pull back and now it's like slowly. We could just spike in there to bounce back. So let's see. Oh gosh. So you're not going to see it on, let's jump down here and let's see. That's a very good question. How do we know when we're going to start looking for sells again? So now you're looking for your fair value gaps. So we bounced off this fair value gap today. That's a good indication. So price bounced there and it went higher. For you to turn bearish, you've got to break through this. You've got to come. If there's another big fair value gap forming now, then we move into that fair value gap. You need to break through this. There's a structural break here. But if we can close through this, there's a good chance that we will start moving lower. I'm not saying all the way low. I'm just saying short term. Let's look at the 4 hour quickly. I mean, we've got this fair value gap down here. If we break through that, then we will see. I mean, we've marked out these fair value gaps here, and I think that was on the 1 hour as well. So if we go through that one, then I would want to see us moving lower here. If we come start break through these fair value gaps, all you got to do is you go to a bigger time frame. I don't know if it will be on the daily. Let's see. There's a gap there. There's a little fair value gap here. So I would mark this fair value gap out because that's the, I mean, I don't see any gaps. I mean, there's a fair value gap here, then that's important. So you want to see price inverse that to go lower. Then, you know, if you take this low to that high, it's about here. And I mean, that's all this liquidity down to 26. I mean, can we go lower? Yes, we can. There's actually more. I mean, there's more down here. So, but anyways, I mean, there's a lot of sell side liquidity up here still. I'm not saying we will go down, but you look at the biggest, you start with a daily and you work your way down. Don't start on a 1 minute. Start on a daily and look for a fair value gap that blocks price. Not down here, the latest one. And in this case, I think it will be probably this gap up and above this black candles wick. Take that and draw it out and say, all right, for as long as we are above that, we bullish. If we break it, then we turn bearish. And then you can go down to your lower time frames to see. In this case, for a short term, I would like to see if we break through this, but this is not the right inversion. If you got an IFEG form, you want to see it happen very quickly within 5 candles. This is already more than 5, so it could work, could not work. We'll have to see. Hope that answered your question there. Right, so we're in the trade now. Let's see if we can get a bounce here. Or am I going to be the lucky one to see this slice through? Price can even still bounce off that level. I mean, if price goes down and close below this area, then that trade's not valid anymore. Okay. So you're bouncing off a fair value gap. If you inverse that, that would be normally deemed as an A plus setup to send price to these highs. I don't feel that great about this trade, to be honest. But let's see. Can we still bounce here? That's a challenge with trading at these equal highs, or this all-time highs, not equal highs. So the fact that we closed below this fair value gap is deemed as some sort of an inverse fair value gap, and these lows should be the target next. I'm trying to hold on to see if this wants to bounce back. We've seen it a couple of times where we inverse and then we inverse back up. And but normally this is where I cut my trade. But let's see. Yep, I see there's a little gap down here as well. Like I said earlier, I mean, this is the one that stands out, and price could most definitely go there. Obviously give you a much better entry there, just provided we get follow through to the upside. Yeah. Okay, let's see if we can get the push up there. Just close above that. That would be great. Don't pin it. Push, push, push. Okay, let's see. Just give us a little bit of more volume up here. That's about 10 points. Let's see if we can get it. Funny thing is we're not inversing. We did inverse this fairly gap, so we could... No, it's not. It's a fairly gap. This one is the one we need to close over. Do 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 do. 655. Let's see. Yeah, maybe we decide to go lower. It's funny when we buy it, it goes and stops us lower. If we short it, it runs up higher. So obviously I'm out of tune with what price wants to do or something. I don't know. Yes, I am born and bred South Africa. Where are you from? I'm from Joburg area. Yeah, this is the IFG, this one. Just don't like what we're doing here. Hopefully we're just bouncing off that black candle to push up there. All right, I go to Cape Town quite a lot. So maybe we meet up sometime. Yeah, I've been trading for over a decade. It's only the latter years that I've been profitable, but before that, I've spent a lot of time, a lot of money on a bunch of things, tried to learn it. And before I met almost the right mentors and all of that to learn to trade the right way. So yeah, so trading is good if you learn the right way, find the right strategy, and most importantly, learn to manage your risk. If you can manage your risk, then your emotion will look after itself. If you don't do that, then it's a bit of a problem. Do-do-do-do. So back in the day, I used to work for the banks. I used to work for RMB, Rand Merchant Bank in South Africa, on script lending, and I've worked for Standard Bank, one of the big banks in South Africa, on futures and options, on the financial markets and agricultural. Yeah, and the thing is with these trend lines, it's it builds up liquidity, so there's buy side resting above this. Obviously, I wanted to see some sort of a punch up there. We're not getting it. A lot of sell side, all this liquidity down here. So, I mean, price could still drop down. But because are bullish on a higher time frame, I'm trusting this to go higher. But yeah, it could go either way. So. It's funny. The S&P is bouncing higher. Yeah. Let's see if we can follow. So those of you who want to, what made you all think trading is the right thing? What made you decide to start trading or learn trading? What was that thing that you thought, maybe I should look into this? All right, so if this closes above here now, then I will most probably put my stop there. And then you can try higher, these highs up here. But I just want to, try to get a base hit out of this. But gosh, it seems hard because we inverse back. This is normally exactly what we had here, sideways moves. That's the irritating part. Something different in the family. Okay. I want to help family out. Been a software engineer for years. Started out learning and actually enjoying it, so sticking with it to see where it goes. Nice. At first I thought it was get rich quick opportunity. I must say, when I started, so obviously I worked in a bank, so I had a bit of background to see what people do. And then I look at options, and that was like quickly in and out. And I quickly realized, the probabilities on that doesn't look right. And then I was just interested. I'm a numbers guy. So I've got a banking background on trading and also gambling in South Africa. So yeah, so I've been in the gambling space for a long time as well. Casino, sports betting, horse racing, and all of that. I used to build models to trade these things live and work out probabilities fairly quickly. And I thought to myself, if I can do it for sports and horse racing, how's it different for trading financials? Okay, then I start getting down a rabbit hole to learn everything and try to gather data. And the funny thing is, if you got a strategy, like in sports betting, there's certain ways how you can trade it to make money, and you can make money, believe it or not, if you do it right. And then if I can do the same and have the same view, then trading financial should be the same. The only difference is I can only win so much money at sports betting companies, but I can win way more on trading financials. And the other thing is, if I'm telling you to go pick a 4-1 or 5-1 bet, that's almost a certainty. You won't find it. It will be hard to find. But if I tell you I can find you a 2R trade or or a 3R trade, it's much easier to get that done. So it doesn't look like it now, but I can tell you, if you just sit and wait and you get the right setups, you'll get that quite easily. Okay. But Trey, I must tell you guys, I like the numbers thing. I've been a sports trader and risk manager for a long time. And maybe that's an advantage for me there, because I've already got some sort of a background to accept risk and try to put emotion aside. I'm not emotionless. Even if you trade with real money, you also still have a little bit of emotion behind it. But you always need to, think about it and say, all right. And I said this before, if you put this trade like this trade in here, now I explained why I put a trade there, just miss my TP up there. I know if I take this trade 100 times, I'll be more right than wrong. For me to sit and stress about this trade, if this trade wants to stop me out, it will stop me out, whether I'm crying about it or not, and now it worked out. So you must always remember that if you put a stop loss and an entry and you get picked up, there's no reason to get nervous, because that's why you got to stop this, to manage your risk. If you were wrong, it's going to stop you out, whether you stress about it or not. So the best thing is put a trade in and walk away. I like to watch the trades because I like to learn how price goes, and also to note for myself what went through my head when I had this trade, and also if there's big upside, like to manage the trade higher to see if I can actually take out more money from the market. So equal highs on ES. Hold on. What did you say? Yes, mate. All-time highs. Yes. That's it. Start close. Okay. Yeah, ball. Yeah, looks like everybody's going the same, not same direction, but similar. But everything's still very bullish. One thing I can tell you guys, even for the guys that's new on the channel and also new to trading, so you're a software engineer, Wesley, and do you program or do you do programming? Just let me know if you do that, because there's opportunity there. I've been building. I've built this indicator through AI. This one down here. So it's quite interesting, and I think there's an opportunity for that if you know how to program and all of that. But I was going to say something now, something else. Oh, if you're new to trading, I found in the last bull run, when Nasdaq just went up and up and up, every Tom, Dick, and Harry was selling the magical indicator. When it does this, you buy and you hold. And because it was in a bull run, it was easy to make money. And every new guy on the street would pay thousands and thousands of rands, and even in dollars, to get this indicator, because it works. The minute the market goes sideways and pull back on a daily, that's when everybody, then step back and it's like, I don't know what's happening, but it doesn't work anymore, and the same thing's going to happen. Yeah, I still believe we're going to see a big collapse, and then when we start that bull run again, then trading's going to become easier. So if you can survive the times that we're in now, you'll be. I mean, when trading becomes easier, it's going to be. We're all going to laugh about it, but you're gonna make money quicker, and then you know what it feels like to sit and see how paint dry on a wall when price does nothing or moves nowhere. All right, so that trade's out. I've managed to get all this money back, and I'm up $7. But remember, I was down 1,000. I think it was 1,800. So we made it all back. So that was not bad. Come back there. See, in this case, could have targeted these two highs here, then we would have made more money. But that's after the fact. I just wanted to get a quick bounce, and we did get it, but then we ran to the highs there. So 750. Look, I'm not going to say it's a bad idea. I don't think it's a. I don't think it's a. I don't. I don't think it's a bad idea, but I also don't. It doesn't stand out for me to say, do it. Let's all do it. It most probably will get there. Um, I mean, it's moving there. So if you in on your trade down here somewhere, um, yeah, then you can move your thing to break even. But if you're up in here, it could be risky because we could bounce up and down here. We could go sideways and then spike up. It is bullish. The momentum is there, so I don't have a trade open on this. All right, so let's see. You are at the Fair Value Gap. Are you the big Fair Value Gap, this one, or the inverse? Okay, so in this area you've entered in here somewhere. So I mean, we're breaking and we're closing above this. So whatever low is set here, it should be protected. I just don't have anything up here to tell you we'll bounce there to come, because it's fractal. Remember, price is fractal, so it doesn't move in a straight line. Sometimes it does, but most of the time it will go and do something like this. So you can try it. If it's worth the risk for you, I would move it to break even and see how price moves. And personally, I would then trail my stop to certain levels so I can lock in some profits. And if I go all the way, then I'll make, the jackpot. If I get stopped here, then at least I'm not getting stopped at break even. Okay, yeah, this is still a good place. I mean, you should be up nicely from here now. Look, trying to recover from today. This is my lesson. I've been back in the day, I remember there was a time where I said to people, I feel like I'm trading just to break even. That's what I do. I start off red, and then the rest of the day, I'm just trading to fill that gap to make it to come out flat. So and that's the wrong way to think about it. So I'm not saying you must cut your position here. If you're in a position that goes your way, then great. But don't try to push it to think you're gonna get to that 750, because we might not get there. We might consolidate there. If you see price do something that you don't like and you think it will roll over, then rather take the profit there. Even if it's only half of your losses of today, then it's fine. Tomorrow's a new day, and then tomorrow you can make up the rest. But don't force a trade, because the market will not go where you need it to go to recover your losses. So what I'm trying to say is you mustn't think about, I'm targeting that because that's where I'm going to break even today. You're going to say, if I get there, then great. But in the meantime, I'm going to manage my trade that makes sense. If it goes against the rules that it might turn lower, then rather, and that's why I'm trailing my stops. Because if I would have entered a new trade there, that's where I would put my stop. So I move my stop there. If because the reason for that stop is, if the market breaks that, then in my mind I'm wrong. So if I'm in the money and higher up, it proves me wrong. Why would I not take the cut there? Why would I wait for it to come and stop me out? Because then you're not thinking clearly about it. Okay, let's see. Someone post something on. Okay, that's a nice entry. Okay, that's a good entry. Yeah, that's very nice. Very good. Um, that's like a perfect entry. Well done on that entry. That's a good entry. Just to let you guys know, so he entered right down here, and his TP was up here. But if you left it, obviously when we broke here, you could have moved to break even. Even at where we are now, I would even put my stop here. You can put your stop at the highs where your original target was, and then see how much money you can take further out of this market. Right, liquidity. How do you tell when a protected low is not just liquidity? All right, this is where what it is. Let's use this one here. So you see this is a swing point forming here. Let's mark it out for you. That's a swing point there. Then another, so, and there's a swing point here. Okay, there's your two swing points. Then we stopped, we came down, we ran it. So we ran liquidity, and then we expand, closing above that. This now becomes a protected low because we closed above it and we went up. Even if we now come down, we should come down to this level where it actually came down to. So your stop is safe there. If we break this high, which we have, then let's mark it out. Let's do this. That's a protected low. That's a protected low because you broke structure here. But when I say break structure, guys, I'm talking about we shift and close above that. Same thing here. Not pin through it when we close above it. All right, so now that's protected. Now we break through, consolidate, and we move higher. My stop goes there. Now we go and we do all of this stuff. And what do you know? We went and pin, close above that. So now this protected low becomes this one. So now my stop went from that. Depends on where you entered. Say you entered up here or even down here. Now your stop is there. You pass break even. Now you're in the profits. And my next stop would go here. And you want to know why? It's because, oh gosh, there's a low swing point right there. And we broke through it. We broke through this. And my stop go there. Because we close above this high. And pulling back, if we close above that level, then my stop would go down here. But I needed to make a swing point. Swing point is 3 candles, a lower one in the middle and 2 higher lows on the side. So we haven't closed above this yet. So let's see. So now from here you deepen the money already. Oh God, lost targets before going there. Okay. All right. So, I mean, I'm not taking trades here, but I'm going to show you guys how I would trail my stop. And this is up to you to trail it like this. This is just me trailing. This is how I'm trailing my stops. This is a nice entry out of this order block. Break your structure, come back, bounce right through it. Okay, so if you entered here, you would have been break even. This is, I mean, even up here, I mean, I would trail it here, because even if we go there, even if this comes down and stop me out, I mean, you're never going to hit it perfect all the time. So, and we at 700 is also psychological level, so it could bounce there. So my theory is, if I've entered here and my stop was here, and I can move my stop to break even, why would I stay at break even if I could have moved my stop up to here? If price now comes down and close below that swing point, that protected low, that tells me I'm wrong here. I'm not going to wait till it violates that one. So there's a very good chance that it will roll over and come all the way back down here. You don't want to then sit and say, okay, let's just cut it. You would have made more money up there than down here. Remember, trading is about protecting your capital. And if you're in an advantage seat of securing money, then that's good. If it takes you out and then go to 750, you shouldn't be angry about that, or you shouldn't be angry to me about it. I don't know if we're going to get there. We might get there, but we also could come all the way down. Remember, this February gap has not been filled yet. So we could go all the way down here. Then all of this effort was for nothing. Okay, so now I'm going to look at that high. We now start breaking, and what you can see, the pushes are getting smaller. So okay, let's see. Okay, let's see. At my lowest, I've lost 6K in trading from blowing accounts. Is this prop firm accounts or personal personal trading account? Okay, that's perfect. Great work. If you can take money out, that's always a good thing. So great work on that. It's all about progress at the end of the day. I mean, this is where you want to see price bounce anyways. And what I also do, if I put my stop here and price is moving sideways here, and it looks like it's going to stop me out, I don't move it lower. I leave it there. Once I moved it, it's done. It's a deal. It's a done deal. I don't move it back, because once you get into the habit of moving your stop, Before you know it, you're going to move your stop from here down to here, down to here, to your break-even entry or to your original stop loss. And then you're gonna make a loss there. If 74, 740 hits, I'm out. That would be nice. I don't think I'm gonna stick. I'm gonna stick around for another 3 minutes, and then tomorrow we'll be back at it again. But I'll keep an eye on it. I'll have a look, see if you actually got to your target. But yeah, if this candle can close above that nice and strong like this, then that's your new protected low right there. $674. Oh, so that's where your stop is. Okay. All right. Makes sense. Geez. Prop firms. Let me see. Prop firms, I'm trading CFDs. And the reason for that is some of these future prop firms, or most of them, don't allow payouts to South Africans. CFDs, that's fine with that. I mean, prop firms, I think it's good. There's rules. There's always rules that you don't like. But if you can stay within those rules and take payouts, and I'll give you an example. Say it's a futures account or even a CFD account. You pay $100 for the account. You go through the process, you pass it, and it costs you $100, and you manage to take $1,000 out. I mean, that's a good deal. You pay $100 to take 1,000 out, but you got to stick to the rules. That's all you got to do. Just be careful and go through the rules, because and the other thing is about the futures prop firms. When they say it's a monthly fee, and suddenly you've got this thing in your mind to rush your profits so you don't have to pay the next month. So it's all a mind game. And that's why CFDs, you pay once and that's it. You don't pay activation fees and all of that stuff. But if you can do a prop firm, I wouldn't do prop firms straight away. Wesley, I would go on TradingView and open a paper trade account and follow the same rules that you would follow in prop firms. And if you can stick to that and grow that till you're ready, then by all means, then that's what I would do. All right, I'm still struggling when to move my stop loss to break even. What to look at. All right, so I've explained now to you guys where if I've entered up here, I mean, I will just put my stop there, and when price moves, that's when I'll start moving my stop. And if I entered up here, now I'm at break even. I'm in the money, more in the money, more in the money, more in the money. I did not put my stop there because we haven't closed above those highs. Now you have to close above that high before you can move your stop. But for now, that seems to be the place to be protected. If we break through this, we could actually get lower prices here. But just stick around, man. We can go through these every day, so you can get comfortable and know you can do it on your own, and then see what I do and understand, and obviously ask questions if you want more clarity on how to do it. 680, yeah, 680 is risky to put a stop. Could be right. But I mean, that's money in the bank, even if you get stopped at that 680. But yeah, we needed that close above those highs. We haven't. But we also haven't closed below the body of this white candle. So let's see. But the only thing is, it could have spiked you out there. Hey guys, as long as you guys learn something from me, that's why I do the stream. I'm not charging for anything here. I know how to trade. I trade my own money, and I thought of doing this to help people to get over that anxiety of what now, and try to put you guys in a comfort zone, and even people that's new to trading, just to obviously assist where I can and show you guys that trading does not have to be as intimidating or scary or whatever the case is. I've been there, guys. There were times where I thought I was going to take my laptop and chuck it into the swimming pool. So don't worry, I've been there. Yeah, so Nasdaq has been the one thing that's been delaying this whole bloody day. Yep, I thought you were gonna get out there. And look, just have a look at this, guys. Exactly what I said. I'm not going to say anything further. And even if I stop the stream now, you guys can follow through with this. We have not filled this gap yet. We've done filling this gap here. This could quite easily drop all the way down here. And if you stuck to a break even only here because you're too scared to trail it, some people say you shouldn't trail it, you should just take money off the table. I'd rather keep all my money and take it all off the table there than taking a little bit off here, a little bit of there. Then I've got just a little bit trailing up to that point. There's a new fair value gap that forms now. And once you start doing this and you get stopped out there and the market drop hard, you should sit back and high-five yourself and actually feel good that you got out there and some other people who were stuck down here all getting liquidated now, but not you. You managed to take money off the table. So when I enter a trade, that's step one. That's not the complicated thing. Then my main 90% of my focus go on, all right, so I'm in the trade. How far can I push this trade? Sometimes I'll re-enter to enter more money. So what I do is when I go to break even, it's a break even trade. If there's a new trade setting up here, I'll add to that trade. Now I'm at risk for the same amount that I was originally. If I can get that to break even, great. I'm not taking trades up here, but now you double up on your leverage with no risk. And that's how you make money faster. But don't push it just when it actually lines up. So let's see what happens with this. If it goes in there, that's we ran liquidity, we shifted away, we break structure. Let me just take this off. That would be a short, but guys, remember, on a higher time frames, we're still bullish. So just be careful on that. So we might see a dump, punch in there and then drop. But also you want to look at this. Is that the right? It might shoot higher. It might actually go all the way. Oh, gosh. To this one here. And that's just because we're above 50% there. This would be not value. The value would be up there. So I'm going to take that one off. Right, guys. I think that's going to be it for me from today, for today. First of all, thanks for all the new guys that's on here. Thanks for supporting, guys. Thanks for the likes on this channel. Appreciate it. Hope you guys learned something today. What I want you guys to do is walk away from this live stream, make notes, go through the charts, and come back the next day and ask questions. Ask why, how do I do this? How do I do that? Don't worry about whether it's an advanced question or an entry question. It makes no difference. Let's go through this. Let's learn through it and ask the questions. And that's how you're going to become a better trader at the end of the day. But anyways, I really enjoyed spending time with you guys. I'll see you guys at AM session tomorrow. And hopefully we get better trade setups. All the best, guys, and thanks again. Take care. Bye-bye.